Is 2022 a good time to buy a house? 9 issues to examine. House prices increased by 10% last year. So should you buy now in the hope that prices would rise further in 2022? Or we would see the market slowing down? In this video I am discussing the following 9 issues. Reasons why house prices are rising so much. It is cheaper to rent than to buy. Is it a good time to buy a house? Housing market predictions, expected rental growth in 2022, mortgage rate predictions and affordability. Should I buy a house in 2022? What time of year is the best and the worst to buy a house? Where are the best and worst buy-to-let areas? First issue. Reasons why house prices are rising so much. Despite the warnings in May 2020 for a potential fall in property prices due to the pandemic, it appears that the market not just surviving, but positively thriving. The average house price in the UK hit £270,000 in December 2021, which is £25,000 higher than the same time in 2020. According to the latest figures from the Office for National Statistics, that is an increase of 10% in 1 year. One of the biggest trends to have emerged during pandemic involved people looking to move for more space, with an extra bedroom or a bigger garden. The increase in house prices has been due to increase of demand, limited supply of houses, desire for more space and rural living, very low mortgage rates. The stamp duty holiday ended in October 2021. Second issue. It is cheaper to rent than to buy. The average tenant spent £70 a month less in rent than mortgage repayments, assuming paying a typical 10% deposit. Research from Hamptons showed that, in summer 2021, it was cheaper to rent than to buy for the first time since December 2014. Since that time, rents have continued to rise in many areas due to increase in workforce in the cities and people waiting to buy in oversubscribed, desirable towns. Overall, the average monthly rent in the UK now appears to have stabilised to £1,060. Outside London the average rent is now £890. Mortgage payments is affordable only for those paying large deposit, not a good news for first-time buyers since a 10% deposit is now more than 50% of a typical first-time buyer's income. Third issue. Is it a good time to buy a house? Buying a house now is more expensive than it used to be 12 months ago. House prices rose so much, wiping out the savings most people made using the stamp duty holiday. Despite the increase in interest rates last December, from 0.1% to 0.25%, mortgage rates are still low. It is expected that rising rates would hit the housing market by making it more expensive to borrow money. Fewer cheap loans availability would reduce demand for houses, causing prices to slow down. You can still get a 1% mortgage deal, although it would be easier for those with big deposits. So, if you can afford to buy, it is still a good time to get a cheap deal. Fourth issue. Housing market predictions. Many housing experts predict a slowdown in prices, but no one has a crystal ball. House prices could drop in 2022. But prices have defied expectations and continued to rise over 2021. There is a large degree of uncertainty around any forecast, but experts believe that house prices will maintain their current strong levels during 2022 and the growth will be broadly flat, somewhere in the range of 0% to 2%. Uncertainty include the extent to which savings accrued during the pandemic will continue to boost housing transactions and prices. Buyers' housing preferences. The impact of the Omicron on demand. Sales numbers is likely to depress with no new stamp duty holiday to race for, lower levels of mortgages agreed and fewer properties on estate agents' books. House prices trends depend on the level of inflation and interest rates. It is likely to be a slowing of price rises rather than anything more dramatic. It is a seller's market now, so you could get a great price if you sell a property now. Selling now works particularly well if you are downsizing or moving to a cheaper area or selling a rental property with no need to buy anywhere else. Issue number 5. Expected rental growth in 2022. The average rental yields in the UK for 2021 are shown on the screen. Now, let us discuss what we can expect to see in 2022. The best rental yields in UK for 2021 was 4.41%, but what about the rental growth in UK rental yields in 2022? Which locations are expecting to see the biggest rental increases and cement themselves as the high rental yield areas in the UK? Rental prices are much more resilient than property prices, boosted by demand, even in the face of crisis. For example, during the global financial crash in 2009, rents dropped by just 2% compared to house prices falling by 18%. Despite the challenges we have faced last year, price growth and rental prices have shown their resilience. Rental prices are expected to rise by double figures by the end of 2025, with the largest rises occurring both this year and in 2022 as the market recovers. Issue number 6. Mortgage rate predictions and affordability. Right now, mortgage interest rates are very low, which makes borrowing money more affordable. For those affording a big deposit, mortgage rates are low at the moment, since they can still find deals with rates below 1%. But with last year inflation reaching 5.4%, the Bank of England decided to increase interest rates from 0.10% to 0.25%, making home loan more expensive by increasing monthly repayments. Of course, variable rate mortgages are directly linked to the base rate, and so about a fifth of home loans customers will immediately feel the rise. The rate you can get will be driven by the size of your deposit, your credit score, the type of loan, the length of the mortgage deal. Saving up as big a deposit as you can will increase your mortgage options and ensure you get the best mortgage deals. When considering these, you can choose between fixed rate loans in order to know exactly how much your monthly repayments will be during the mortgage repayment. Variable rate loans, where your payments would fall if interest rates drop and they would rise if rates rise. The Bank of England wants to make it easier for home buyers to take out mortgages by ditching one of its affordability rules in the first half of 2022. Lenders currently have to check that borrowers would be able to afford a 3 percentage point rise in the interest rate on top of standard variable rate. This rule was introduced in 2014, designed to stop the banks from suffering losses if borrowers ran into financial difficulty and could not repay their loans. It is estimated that 6% of borrowers have to take out smaller loans because of this rule. By scrapping the stress test, more first-time buyers will be able to buy mortgages and some borrowers will be able to take out larger loans. But of course, there are concerns that this will further inflate the housing market by allowing people to take larger loans, making houses even more expensive. A second affordability rule, which prevents high-risk people from borrowing more than 4.5 times their income, will remain in place. The Financial Conduct Authority will also continue to enforce its own rule, which requires lenders to make sure borrowers can afford a 1 percentage point rise in their borrowing. For properties up to £600,000, if you have got a small deposit of just 5%, you have the opportunity to make a deal guaranteed by the government, with Mortgage Guarantee Scheme. The scheme will run until the end of 2022. The scheme is not restricted to first-time buyers or new-build homes. Issue number 7. Should I buy a house in 2022? While there is still plenty of uncertainty due to pandemic, the property market is very resilient in challenging circumstances. First-time buyers are hoping that house prices will fall, but there is no guarantee that will happen. Interest rates are expected to rise to guard against further increases in inflation, which could affect the housing market. Price rises will squeezing household budgets. Experts think the kind of price rises that we have seen over the past 18 months are unsustainable, and household budgets are only likely to come under greater pressure in the coming months. They would not expect the current level of house price growth to be sustained in 2022, given that house price to income ratios are already at a historically high level. Working from home has enabled many people to move location in order to find affordability. A return to offices or even a hybrid model will limit that practice going forward. So consider that you can afford to buy a home now and you plan to keep it for several years. You should bite the bullet rather than wait for a drop in prices that is not sure to happen. Issue number 8. What time of year is the best time and the worst time to buy a house? During spring there are more homes on the market, so it is considered to be a good time to buy a house. On March the days start to get longer and the weather starts to get warmer, so it is a good time to buy a house. If you want to sell fast, get your property on sale in March as demand is higher. People are often keen to complete transaction before summer holidays, leaving August particularly quiet. Listings, or buying opportunities, pick up during September and October, before dropping off at the end of the year. The worst times to sell tend to be August and December. Issue number 9. Where are the best and worst buy-to-let areas? 5 key factors are combined to make investment locations appealing to landlords. Average total rent, short-term returns through rental yield, long-term returns through house price growth, the lowest number of vacancies as a proportion of total housing stock, percentage of the city population in the rental market. Here are some of the key findings from the latest research. Bristol is ranked top, thanks to its long-term property growth, annual average of 5.1%, as well as the lowest number of long-term property vacancies, 0.6%, and over a quarter of residents, 27%, renting privately. Ranked second and third respectively, Oxford and Cambridge are once again seen as profitable investment locations after coming fourth and second in 2021. Luton shot up 7 places to enter the top 10 for the first time. This is largely thanks to average annual price growth of 5.2%, offering landlords an attractive long-term return on investment. London has dropped to 6th, but remains in the top 10 due to its long-term stability and high demand from tenants. Scottish cities Edinburgh and Glasgow benefit from a low level of property supply, which is helping to push up rents and improve short-term returns for investors. The buy-to-let areas that are most popular with new landlords are Nottingham, Leeds, Bristol, Leicester, Hull. All of these areas have well-known universities. Letting to students is often popular with new landlords due to the lower acquisition costs, annual demand, and potential for high rental yields. Houses in multiple occupation are larger properties that can be let to 3 or more people from more than one household who share living facilities. To successfully let a house multiple occupation, you need to be operating in the right market. Somewhere with lots of students or young professionals could be an ideal location. If you're looking to buy and rent out a larger property, here are the top 5 hotspots: London, Birmingham, Bristol, Manchester, Leeds. It's no surprise that all of these cities have multiple universities and strong employment markets, making them popular with young professionals, and so appealing to house multiple occupation landlords. What about the worst buy-to-let areas? Locations in Wales were less appealing for landlords in 2021. Falling rental prices and a large supply of rental properties in Wales are increasing competition among landlords, making the areas less attractive for investors. Thank you for watching the video. If you watch all my lectures, you may be able to start investing in rental properties a little quicker. Please subscribe to my channel and press the bell to get alerts when a new video is posted. Please write your comments, questions, or concerns you would like to share.